Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto here today.
And I'm Dan Hussey, everyone.
As always, Dan Hussey. Dan got some stuff to cover today. We got some political stuff. We got some market stuff, big moves in the feeders and fat cattle. But Dan, I'll tell you, the biggest, most important item to discuss for us today is the fact that the government is giving me a free water pipe.
Yeah, I can't believe that. You know,
you free water, man. I guess it's not free. We paid for it.
Someone somewhere pays for it, right? Yeah.
I want to thank all the taxpayers, but I got galvanized pipe from the street to the house, and they're going to replace that pipe they're not going to replace it. They're going to leave that in place, and they're just going to put a new pipe in. So that's pretty exciting. I'm going from galvanized, which was all of the rage, high technology water pipe, long about 1928, I bet, to that newfangled copper stuff. They're going to put real copper underground, so I'm pretty excited about that, though I would have taken PEX. Don't tell them, but I would have took PEX. But yeah, that's the excitement over here, Dan, on the Indiana side.
Yeah, I think you want that copper when it's out uninsulated in your yard there. You don't want that freezing.
Yeah.
Or being a higher probability to burst, I think, when it's the PVC. But anyway, we'll see. These markets were little lackluster into the end of the day, I'd say. But generally speaking, I think it was a pretty good close for the week. Where do we want to begin, Joe?
Not surprised, right? To see some Friday, you had some option expiration. We had some pretty significant moves coming into the end of the week. And so doesn't surprise technicians of our caliber that the market might pause here on Friday. Our feelings were, and I bet with a lot of the viewers or listeners, our feelings were that the next 48 hours are probably going to be rather important for these markets that are trying to hold these breakouts. Not to mention that you've got a Trump-Xi meeting that comes in on Thursday, October 30th.
And it does look like that meeting is going to be taking place, right? You heard both sides out of the president's mouth this week with a big old maybe that turned out to be just jawboning and running his mouth. And so looking forward to, I think we saw some articles this morning out how China might be posed to try to strike a deal too. So there isn't an air of negativity around this meeting, it seems like, that we've had in the past.
And there are really only three outcomes, right? One,
right,
get something done.
They can't buy less.
One, they get something done and it's great. Two, they get something done and it's a very small amount. Or three, they tell us to go pound sand. And I cannot assign high odds to the third option. It feels, we saw some rumors this week that they were already buying beans. Rumors to this point still, to my knowledge, at 153 on Friday, unfounded, but widely circulated on both sides of the equation, on the Chinese side and here in the U.S.
Yeah,
and smart, the wise folks on our side, on the Zaner Ag Hedge side, saying we don't really see that kind of pressure here in the system. I would suggest that it's the Chinese, and if they want to get something done without letting anybody know, they'll get it done.
When you just game theory out, like thinking, if you're China, what would you do? What would China do here? We know that they always do what's in the best interest for China. That's not the hard part to figure out, but it's how do they execute that plan? So it seems like a great time to sneak some sales under the table here, or even do some purchasing on the board itself, right? Where it's really hidden away from the prying eyes of export watchers. So no government data here in terms of, or I guess not no government, but you're going to have harder time, right, collecting and having that government data during this period where it's closed, even though we know that there are still some frontline workers or what do they call them? Whatever they're called, still working at the Bureau of Labor Statistics and some of these places, getting some of the numbers out there. But needless to say,
you and I have watched in the past where we suspected that larger participants were selling puts on breaks.
Yep.
And then they come in, they buy the futures, cover the puts, run the futures up in anticipation, or hold those long futures in anticipation of announcements. I don't think I can't speak for you maybe in this, but I have never, nobody has ever told me, oh yeah, that's absolutely China, and here's how we confirm that. But
Right.
we have seen larger participants execute that strategy in front of these events because they simply know that they're in control of the narrative, right? Maybe we're not going to do something. Market breaks. They make money on the puts, cover the puts. Maybe we are going to do something to get long the futures, make the announcement that they are going to make purchases, market rallies, and they made money on both sides
Right.
of the deal there. And we let, of course, U.S. markets, as democratic, as open as they are to people who should have access to them, they get to do that. I don't know. I'm not sure how I feel about that. I'm not sure how you feel about that, but we've seen that happen and maybe got some of that going on here in front of this big report as well. Don't you think?
I do. And I think you could say the same about cattle, right? You have foreign interests in the cattle markets as well. And look at how much they move ahead of what are rumors and otherwise just reasons at this point and not actual rationale or not actual results, right? We'll get to the cattle in a little minute.
We're going to get to the cattle for sure.
But coming back to the soybeans as well, right? You have another potential for a foreign entity to potentially be using our capital markets to doing their business as they should, right? Just like a row crop producer sells calls as a potential like target, right, for a hedging strategy. If you're wanting to and be a commercial buyer like China at the scale that China is, selling puts and doing things of that nature are right in line with your hedging strategy. So that's why that we're building the narrative around the idea that, hey, who does these big things? Oh, it makes sense if it's this type of entity. And if the glove fits, it might be Chinese made.
You must have quit. So let's talk about wheat because we never want to talk about wheat. But this week,
right.
little
I'm
bit
feeling
productive.
good at talking about wheat
right,
for the first time in a while.
Bad leading with the wheat. Also, and not that you and I are any good or not, maybe we don't want to traffic in rumors, but this one is notable. Maybe there is some Chinese buying in wheat. So all week, everybody's speculating about beans.
You wonder, right, if it really was Chinese buying in wheat and not beans. Right. And you're like, oh, well, it's okay.
We'll take it.
Quick to make assumptions, but
we'll take it. This week in the December wheat opened the week at 505. The high was 515 and a half. Low was 498 even, and we closed at 512 and a half. That was up 8 3/4 on the week, Dan. And I'm reading that the funds should be short about 93,000 contracts, according to our friends at ADM. Open interest going down as well. I'm suggesting that maybe short covering a small amount in a position that was essentially 100,000, 120,000 contracts forever now. But a trend in that covering is beginning. Wouldn't you say?
I would say so. And you're starting to see a little bit of a volume taper off today, but you could see that volume building from a couple of days ago as we broke above that 18-day moving average. The red line on this chart broke above this downward sloping trend line, coming up into that 50, 55-day into the 518 area. The next big levels above are going to be this old high from September, the lows from last May, and this 100-day moving average around 540 on the wheat. So I've got a good inkling to say that we've maybe reversed a little bit here, and we could be treading towards that area on the chart. Of course, every quarter or so, we look for that run up to the 200-day moving average too. So I'm very hopeful that this could be the start of a move up there. In the short term, we did get a little overbought in that daily RSI. So it ran out of steam today into the end of the week. But so long as we hold on to the 18-day and the downward sloping trend line as the supportive area to the downside, I think we've got a constructive trend higher.
How about Deeth corn? Opened the week 422 and a half. High was 428 and a half, low 418 and a half. Last trade 423 and a quarter. That was up just 3/4 on the week for December corn. And I'll tell you, if you flip over to a weekly chart, isn't that interesting?
Oh, I had that weekly chart up there. Yeah.
Went around the block to get to the house next door here this week. And that's pretty interesting.
In this outside week here, I think you're referring to, we just started off low and you get back out over all of these highs, right? What looked like corn topping all of a sudden quickly becomes, maybe not so much.
On a daily chart, it's hard not to get excited about that. And last week we sat here feeling the same way, suggesting that I have been here before where I get excited about these breakouts. The market does not follow through. Next thing you know, I'm laying on my back, counting the lights on the ceiling, having had my head kicked in
But it's all good reporting. You're back above that 18-day moving average now,
Really
closed
nice.
above the 100-day. You closed above the 50, 55-day. The 18-day pulled above the 50 and 55-day moving averages back in September. And now it's starting to hook back up and try to get above that 100-day. This is actually pretty darn constructive. I hate that we're just still running into this old support that is now resistance back from July. The old contract lows around the 430 figure. But you know what? You get out over that. You just got the 200-day, and then it's like open season for the rocket to run back up to 460 in these old highs in this downward sloping trend line. So maybe a little bit of chewing through some of the what really is fairly strong resistance that has already held once here on the chart, but it's still very constructive to me and a good look for December corn so far. I think we'd be also behooved not to say that gasoline prices we've seen run up here, oil prices higher. I think there's really that energy bid here that's been holding corn up very well.
Drinking game for the week. Everybody do a shot when an analyst mentions the head and shoulders pattern here in corn.
Sure.
Widely identified, likely heavily traded by the spec community. They've been covering here. I think that we are short 87,000 corn, which is down from that number from previous weeks escapes me, but the short position there is getting smaller. My guess, and there was a little bit of debate about this amongst us earlier in the week. My guess is that short position is going to be a lot smaller than people think. I think the bean position is going to be a lot longer than people think. I think the short position in corn is going to be a lot shorter. I think the funds are ahead of this, and they're quietly getting this stuff covered. We'll see. Government has to reopen sooner or later.
And I think you're right, because you're going to see that covering, I think, has begun in wheat. And I feel like that where we've been the shortest, right, we're starting to see that position covering. You do expect the same out of corn, and the opposite for beans.
And so on this chart, my thought is, and this is not the most scientific thing we're going to say today, but you get out over that 430 area, you start closing over that 430, and this thing really is going to have some momentum. And it's going to be hard to see us not knocking on the door of 440 and higher. Now, that obvious technical move lends me more suspicion, right?
Yes, right. Because everybody sees it, everybody knows it, right? And
if we come back here next week and we don't get some follow through in front of this Trump G meeting, I'm going to get very nervous. I'm not going to be able to be comfortable about this rally until we start closing well over 430 and maybe even over 440. However, those levels should lead, that technical reality should lead these funds to get on the bid even more aggressively and get that position covered. They are underwater. We saw sellers as we moved down, both times down into 410. Those moves were sponsored by fund sales. All of that is underwater now. And I don't know how long, I'm not sure how long funds are prepared to hold that many futures contracts underwater while if this market continues to rally and gather ground over 430 and 440.
And that brings up the argument that funds are going to catch themselves in short positions here when there's volatility and other macros, right? They care about P&L, right? If they need the money to meet margins or do something else, they're going to trim positions that aren't going well, or right, that maybe have profits and they need to now cover, or as the daily technicals flip like this, right? There's a lot of selling. There's a lot of commodity-based systems that are off of daily technical levels that we try to cover in these videos. And we expect big participants, whether it's a short covering now, like in the corn and the wheat, or starting to pile in on the long side in the beans, it makes sense for it to be going along with the narrative at some of these levels we're talking about. So yeah, expect more of that short covering, expect that corn to really trim and taper. Like Joe said, that's the fuel for the fire if we can make it out over some of these major technical levels.
Now, we got to talk about beans, the entire bean complex. Super interesting this week with the political meeting scheduled for next Thursday. Bean contract, looking at November still, probably I'm not sure if it's still November or January. November will probably suffice, huh?
Today being November's option expiration, I feel like is the last day of legitimately talking about November. If you actually do look at that Novi bean spread to Jan, I do want to comment that has actually been a bit of a mover here today. Started off the day in this week up there at around 15 cents over. Well, I guess it started off over the last couple of weeks, but big 5-cent swings here in this spread here. we're seeing that roll happen in real time is what I'm getting at. So this is visually the market changing to January on a chart, on a weekly chart there. And from a daily perspective, you can see how much we've been moving around on it. Breaking down on this, folks, not necessarily bearish for soybeans, but it does suggest the lack of delivery and trying to encourage storage here in this market. So in other words, this doesn't necessarily suggest to me that there are buyers here for November beans, like we're trying to suggest that maybe China's doing, but okay, it's also just a 5-cent move in the spread, so let's not get too excited. But with that being said,
open the week at 10.20, the high was 10.45 and a half, low 10.19 and 3/4, closed at 10.41 and 3/4, up 22 and a quarter in November beans on what appears to be rather decent, rather excellent volume.
Yeah, you see that weekly volume increasing here. That's agreed. Could be part of that roll, which, hey, why don't we check out the Jan and look at that volume building in the Jan there and that new contract? That right? With open interest going up, volume buying, that this actually is a really healthy move and a way to close the week, in my humble opinion. And
this daily chart is, in my opinion, really, it looks so good that it makes me nervous. That's above reproach. We have had a really nice move off of what was essentially $10 on a daily chart. And here we are, 10.41 for the week, little quiet option expiration Friday before this big meeting. We did some really good work yesterday. Took this market all the way up to 10.45.
Yeah, let's also talk about that, right? Like, what was the strike that I think we were talking about how we didn't think we were going below 10 because it was the most populated strike in the options. And the crazy thing about those puts were in this this November soybean here, there were 16,000 here going into the end of the day. That was what, 30,000 I think we were looking at its peak, 28 or something. That was that was down at the $10 put, which has 22,000. But look, the 1040 put here with 16,000 contracts going out worthless with the settlement here at 3/4, right? Like they took every single put for November beans under 1040 out of the money and worthless. And there's 22,000 there. Now we got 30,000. Here's 45,000. Here's another 12. So that puts you up to 57,000 plus the 16 here. That's 73,000 puts that just expired worthless from this run up into today's option expiration, folks.
Which I think soybean producers would say is a small price to pay for a guy being able to make his fertilizer payments here. Or pick up the tab for the
agreed. That shows you, right? The insurance didn't pay off here, but the price of beans is rallying. So a good thing, right? On the cash side or in other parts of your portfolio. And just to really quickly look, the other side, the call side was very light compared, definitely a solid amount, but nowhere near the 73,000, right, that expired. So the skew of max pain and the option expiration was to take puts out of the money, and the market did it.
You hit upon a very solid point that this thing could, and I think you and I have discussed, I feel like we were just talking about this yesterday, is that we're at a point in time where it could go much higher.
Oh, yeah.
If something falls apart here, if they come out of this with no real headway, the bean market could react rather negatively.
Of course, when you look at Novi beans on the daily chart, we're still just in this larger range. And you hate to say it, but in the commodity and futures trading world, people oftentimes look at these sideways ranges as a bear flag in this case, right? You got a strong downward move into sideways price action. These things can sometimes resolve lower, but $10 has been so well supported that at this time, you're not thinking about that. We're thinking, okay, we've come up off the lows here. We've traveled and across that spaghetti of moving averages. In other words, just the middle of the average range and middle of this range. That's all that is. And we've run into now upside resistance into these trend lines. We break out over these trend lines. You have a year's worth of buildup, right, of selling pressure that is going to rush in and try to buy this market again as we potentially talk about $11 and $12, right? Not saying we go there now, but you've still got resistance up into the 1080s, I'm sure, that area on the chart that has been resistance going back to September 2024. But you've got a very strong move up, as we saw in the January contract, in increasing volume day over day. Even today was increased volume compared to yesterday, which was a big move. I think some of that has to do with the roll. I think that's pretty much the only reason that we were even down a few pennies today, was trying to maybe back off the charts or go back below that 1040 or that 1060 area on Jan or Nove, which didn't happen. And now you've got a market that is ultimately left into the weekend with maybe some positive news around the corner for a deal with China that could be on the table and talked about next week.
And much the same way that you can't be surprised if it falls apart, if they don't make a deal.
Exactly.
If they do put a big, beautiful deal together, this thing's going to scream. And so you when you look at it within the context, and my guess is that sideways pattern there probably coincides with this entire, are they or aren't they going to buy the beans? Mm-hmm. And here you may be coming to a point in time, like you said, where that question gets resolved. And if they put a deal together, a deal that works both for the Chinese, who in my opinion need, a lot of folks not sure how many beans they need. And we had some discussion this morning about what they might need to bridge them to a Brazilian harvest. But my feeling is that if they do need more beans than we think, and they come out with some big deal, or they at least want to make headlines and make it worth everybody's while for paying attention to this for however many damn months we've been paying attention, this thing you could get some distance.
You absolutely could. And I think there's a lot of talk still that we could absorb a lot more of the rest of the world demand for soybeans. There are countries like India that are starting to buy these products for the first time in their history from the international market and import them. That's another billion people that are going to have to start to relying on foreign imports. There's a lot of import controls there as well. So the growth is going to be longer term. But the point being is that even without China, we're still facing decently tight carryouts if we absorb a lot and some of that other demand from the world, which is entirely possible. Brazil's probably tapped out on their sales from an infrastructure capacity standpoint, as well as just the ability to sell beans at this point, because China's gobbled everything up they can and is looking to then do so for the next crop, because they're, of course, trying to placate into the idea that they don't need us from an agricultural producer standpoint, which there's a lot of argument that
we talk about it from that perspective, right? We talk about it from a political perspective, but what end user in their right mind wants to have one
sever
supplier,
that relationship, right?
Oh, I have a business. Oh, what is your business? I make widgets.
In 5 years, right? You cut America out in 5 years. Brazil goes, hold on. Yeah. Hold on. We've got the tiger by the tail again. Exactly. And that's the game that is played with China over and over and over again. If they bottleneck into just one supply chain, it leaves their communist country that cannot survive feasibly food shortages and all these other things and needs it. It's just a bad deal. It just doesn't make sense for China. It's not in China's best interest, and China will always do what's in best interest for China.
Exactly. Feeder cattle opened the week 371.85, high 375.15, low 352.20, closed at 352.20. Down 19.5. Lot of the cattle world wants this rally to be over. This is the most hated rally I've ever seen.
You might have it, folks. On a gap down and go off of all-time highs there, we are now below the 55-day, 18-day moving average upward sloping trend lines and below these old highs and back into the consolidative range from August through September, where I believe we had some news of maybe some screwworm scare back then or something that caused a little bit of a sell-off, and market didn't care and continued higher. But boy, this pullback now feels a lot different than the ones before. Now we're slicing through technical indicators to the downside. You got to at least mention that we're coming up on this late summertime supportive area pretty quickly. And I hate to say that we are limit down and we had to only be limit down, because gosh, if we were allowed to keep trading, I wonder where we would have went today.
Dan, I would caution that we have taken back 1, 2, 3, 4, 5, 6, 7, 8 days, 8 days worth of price action that took us from this very level, 352, up over 380. And so we think, oh my gosh, market is down 19.
It also, you're right. It actually did the same thing the other way. This is a V shape, right? It went up as quickly as it's coming down.
And so to me, this has the beginnings of Yet another head and shoulder pattern. If we come back and we rally up to that, what is that, the 18-day at 368? Some attempt to try to get back up into that gap. If it fails there and then we start heading back lower, sure enough, there's your head and shoulders top. Market like this, trend should change like that. But, and here may be, allow me 2 minutes to give you what will likely be the most bearish signal in cattle anyone will have this month, is that nothing has changed fundamentally. Their animals still aren't there. And even if you open the Mexican border tomorrow, how long would it take to get there? I recognize that the futures market is designed to help us guess about the future, but I'm not sure that anything has really changed here. And I want to buy this so bad that my hands are shaking.
You're right. Because when you look at actual cash cattle markets, we have not fallen this much, right? This is the last basically 3-4 days of price action have been very much board selling and cash prices remaining firm. Maybe that's a thing that trails off in the end of this week, and we come in next week and everybody's got two hands up at those cash auctions, but or nobody's bidding, I should say, right? Because you don't have sellers the same way we have an open outcry, where two hands up and open outcry means you're selling.
Now that I have exhorted my limited take on feeder cattle fundamentals, let's talk about why this could be an area where the market should see some topping action, right? And allow me to open. This young woman that runs Mexico is on her way to Washington, and she would like to talk to somebody about opening this damn border so that they can get all these exceedingly fat cattle that they've been feeding American corn to back over the border where they belong. You and I were talking about this before. Share with everybody. Like, this is like, tell me.
Yeah, that was the news.
There's a process
the headlines
for this,
we
right?
see yesterday, right? We see those headlines yesterday. It makes sense why, in my opinion, why we've got this emotional sell-off now. Because if the border's open, there's probably no reason feeder cattle prices need to be cattle prices need to be this high if there's going to be a flood of animals. But there's still the screwworm concerns. We don't have an open border just yet. It's going to take a little bit of time to get those animals actually carted up and moving. Not as much.
They're going to bang them with the drug. Somebody, if it wasn't you, somebody told me the name of the drug earlier today, and it escapes me now.
And there's a couple things going on, right? The vaccinations now, and also a whole plant they're building to try to combat screwworm, which we still don't figure out how that works. But
it's like an ivermectin situation. Right. I'm not sure that that's the actual drug, but they've got a drug that can stop this. And somebody said when they get to the border, any little blemish sends them right back. And so there is a process to handle this. Now, I don't know that I'd want to be the screwworm president that launched screwworm here into the southern United States, but you could see where if anybody could handle this and make sure that this was done correctly, it would be a combination of the Mexican authorities and the U.S. authorities to move these animals through. It could be done.
And American ranchers aren't stupid, right? They can pick out disease from a mile away.
It becomes a labor issue, though, from what I'm told, too, right? So you have enough people, to actually look. And that under these circumstances is different. It's weird how this border issue works both ways. We may be sending some of the labor that could do that back over when we might need them here. But I'm sure that this thing has a way to ultimately resolve itself. But at the end of the day, can you think of any other reason why it would keep coming down like this?
No, in the short term, that is pretty much the only alleviating thing that I can imagine, right? You needed to just magically wave a wand and have a bunch of cattle present. That's the only thing. Cattle can't get any fatter any quicker, right? We can't breed them into existence any quicker. The only way that this market gets quelled like this, because this is not coming down based off of the announcements of Argentinian beef coming into the market. That would not bring down cattle prices. If anything, domestic cattle prices could continue to rally in the face of that, because there's still going to be even stronger demand for U.S. U.S. corn finished beef that is just superior to anything else produced in the world. Americans don't like foreign grass-fed beef. We just don't. We like what we know, and quite frankly, we do it the best. So that's a big reason why you could see that. However, bringing the animals in, that changes things almost overnight. And that's why you're seeing this violent downdraft in the board prices. But again, this could be another market where we'd love to see some international entities that have controlling stakes and major packers and conglomerates in this type of industry. Okay, are they driving down the board price systematically now to then buy it back cheaper. Cash prices are remaining firm. This could just be an opportunity for those commercials if they don't see the pressures getting alleviated fast enough. And that could be a reason also why this market's gotten overdone in the near term. We're way oversold in the RSI. We're back down into this old range. Like Joe said, a relief rally to set up a head and shoulders pattern. All those things make sense here. Even the limit down, we're probably getting closer to a point of needing a little bit of a bounce than not. But there's nothing to say in this environment that has to happen either, because opening the border, getting cattle in, if that, becomes a reality and a herd comes stampeding in, there's a very good reason why cattle prices are much higher than they need to be.
Gives us some perspective through this weekly chart. Now that I'm looking at it, in fat cattle for December, opened the week at 242.37.5. High was 246.12.5. Low 233.92.5. Last trade 233.92.5. Of course, locked limit down 790. And I spent the whole day thinking, cattle will never be good again. Yeah. And then I look at this weekly chart, and lo and behold, we've only come down to where we started 2 weeks ago.
Yep.
And you've got weekly support at 231. You've got weekly support at 230. You've got swing support-ish at 222. And nothing, of course, cash trade is going to dictate. The cash trade is going to tell us. But this could be yet another example here in cattle of the tail trying to wag the dog. In fat cattle, just from watching the market open, you saw a really big dose of volume 2 days ago, over 4,000 contracts on the open, tremendous downward pressure. Same thing here this morning. I think the number was more like 9,000 or 6,000 contracts.
Impressive volume selling here.
A lot of it,
but panic
came
too.
At the open, right? What you have is algos that are designed to look for these headlines. The algo captures a headline and then allegedly is supposed to sell off of those headlines. Now, whatever selling is hidden in there while the algos have their headline, who's to say what that is? Oh, well, because by and large, the market participants in cattle are large funds and computers. And so who's to say who that is that's selling and why?
And by the way, this isn't a market that has thousands of resting orders on the bid and the offer. So when a big orders come in and big headline driven funds try to toss around a few $100 million or a few $1 million in a market, that has a bigger dent in a market like cattle than it does in corn, beans, gold, or any other kind of commodity price that you want to speak of. So there's a reason we go limit down so quickly, like Joe's saying. You get all of that volume, all of those computers, all of those eyes and things stampeding in. You get a herd mentality that happens in seconds.
Now, I would never say that a market that's dominated by four major players in terms of packing would have any incentive to force a market lower so that they could benefit from lower prices. Dan, I would never, ever say that.
It's amazing how these things play out.
Right. I would never, ever say that. But in this case, coincidentally, at this time of the year with price action like this may allow your big four packers to secure supplies for the holiday season at a lower price. And so imagine my shock at this type of market volatility at this time of the year where they're attempting to build supplies. Now, could be 2 or 3 weeks from now after they secure those supplies.
And by the way, we have seen headline trading in the past, back in April, March, like we said back in August, where there were similar headlines, reports of screwworm and nastiness and bad things happening that you come in the next day and were bid up. And the market, it was just an opportunistic buying opportunity for those packers and commercial interest.
And Dan, the thing that caught my eye when that happened with that fella that came back from like Nicaragua or somewhere with screwworm, how many of your social or news gathering platforms did you see pictures of worms?
Yeah.
That's the most.
I'd never seen a screwworm before in my life. Never knew about it. But
that's the most worms I've seen since I was fishing. You know what I mean? Like there was so many worms. I was like, come on, man. What are we trying to do here? And it lasted for 3 days. They tried to make a big deal out of this one fella that got wormed up. And to me, this is suspicious. It's highly suspicious. A lot of folks can look at this and say, oh, well, it's a relief because this means that the prices are going to come down. And that may very well be the result of this. But I would say, and I think that you would agree with me, is that it isn't, prices are set in just a couple places in this game here. And it ain't with the rancher, it's with the packer and it's with the retailer. And probably the retailer would say, well, it ain't us either. And so the idea that we're going to muscle the producer into lower cattle prices to me is a non-starter. And you're getting a lot of pushback. It's almost, this could almost have the opposite effect, where people who are of a certain age and have a certain number of assets and a certain lack of patience for this kind of nonsense may throw in the towel. And then you end up with even less people producing and less animals being produced. And the long-term effect is even higher prices.
And it's the same thing we see in the row crops as well. This is all also happening at a time when interest rates are at the highest they've been in 10 years. So you're hit at all fronts financially when, prices start to drop and credit starts to crunch. And you're right, Joe. Unfortunately, these times usually are, you hate to say it, by design, but they feel like they're by design by bigger powers that be to start trimming out the weak links within the production area, market, which is unfortunate, because you're right. This is not the packers here who are having a bad day. They're getting to sell high beef prices and get a break here on being able to buy up some cattle. You wonder how long that can last, right? When cash prices, like you said, cash is king here. And interestingly enough, this is happening still not towards the end of our November and December contracts, right? So there's some time for these contracts to rally back to meet cash, which I would suspect they probably will start doing if cash doesn't show any weakness.
That was my question to you, is with this type of price action that we saw 2 days this week.
Not going to catch a falling knife, right? Wait for a reversal in the futures.
This kind of price action, what do you think happens on Monday or Tuesday?
This is the type of move where in cattle, it's volatile enough where I kind of joke, but the guy that lost his wallet today will probably come back on Monday to find it. I think there'll probably be some kind of relief rally. Probably we open lower, then we rally back up, maybe fulfill that head and shoulders type pattern you're thinking. And now we've got a market that's discovering price again, comes back to tests to see if it needs to go to catch up with cash. And if it does or doesn't, we can make a determination if the futures are trying to say something, or if there's rumors that are being maybe found to be true about some of these happenings. You're going to see the cash market relax and will confirm some downside. But yeah, when you've sold off this far, this fast, you got to think a little bit that there's going to be some kind of snapback, and volatility can be a double-edged sword.
Absolutely true. Absolutely true. We have covered a lot of information here. We would be remiss if we did not mention Karen's newsletter. Folks are probably well aware of Karen. She has been putting information and insight out onto Twitter/X for a very long time. 86,000 plus followers. No exaggeration to say that people care very much about her thoughts. We care very much about her thoughts, and we think that our folks will too. If you have not signed up already, and whether you're a customer, whether you're not a customer, whether you're thinking about being a customer, take a moment. There's a link down there that you can use to subscribe. There's no obligation. To get this level of market analysis is a tremendous, tremendous value. And you can get her in-depth but easy to understand analysis straight to your inbox, always putting out great information, estimates, debriefs around big USDA reports when there is a government to report, crop watch, updates, harvest ideas, analysis on historical data, a lot more. Link is below. It's quick. It's easy to sign up. Go do that. We'll give you a shout. Make sure that you are getting the information with just a friendly call, and that will work out terrific for you.
Yeah, I think we got a question of the week from producer Carter here. What is a food we never get tired of? A meal or some food you never get tired of, Joe?
Tequila.
Okay.
That's a salad, right? I watched a young woman on the internet make a salad, and it was tequila, ice, lime juice.
I thought you'd go with the Bloody Mary if you're trying to make a drink into a meal. But okay, we can go with that.
I see a million Bloody Marys. And when I was in preschool in the Indiana Harbor neighborhood, they would send me to this church basement to go to preschool. I was probably 3 or 4 years old. One time I had tomato juice in my life, and that was at that preschool, and I swore I'm never, ever drinking this again. And I have not had any tomato juice on purpose since 1972.
You've definitely had that bad experience, and you can never go back. I understand.
Yeah, no Bloody Marys for me. You drink a Bloody Mary?
I've been known to, but
All right.
I mean, that's really a kegs and eggs kind of like beer before a tailgating kind of thing for me. Maybe at a brunch, right? I don't seek out a Bloody Mary. Let's put it that way. But if you give me a good spicy one at a tailgate or at a brunch, I'm not going to complain. But in terms of a meal, I never get tired of Mexican food. Just put it, just any of it, put it in front of me. I'll eat it. Love it. Love it.
Mexican
Can't,
food
can't
is
get
like
enough. Can't get enough.
There's never a bad
So,
day to have.
so I guess if I got to go with one meal, tacos, right? Because I can do tacos a bunch of ways.
I think I got to go with pizza. It's very difficult to put something on a pizza that I find distasteful.
Pineapple.
A pineapple.
Are you
pineapple?
Are you pineapple on pizza person?
I have people that won't speak to me because I am a firm believer in the freedom and the American freedom of putting pineapple on pizza. A little extra sauce.
That's fine. I'm not saying you're not allowed to. I'm just saying it's disgusting.
I'm just saying, and then of course, if you're putting pineapple on it, you definitely got to use the Canadian bacon. And
Sure.
I'm not sure what makes it Canadian, but you got to chop up some Canadian bacon, put a little barbecue sauce on that. Yeah, a lot of my purist friends and acquaintances just are so disgusted at the idea of a pineapple and Canadian bacon and barbecue sauce pizza. Man, I'll tell you.
Well, I'm sorry, folks, for us getting way too politically food oriented there at the end of our broadcast today. But thanks for joining us here at the Zaner MarketCast. If you need more because you just can't get enough, you can follow us on Facebook, Twitter, and LinkedIn at the Zaner Ag Hedge. You can also get daily market commentary for signing up for our Ag Hedge hotline hosted by Ted Seifried. It's free. It gives you daily access to some market commentary and a chance to connect with us personally. It really should.
It's so valuable.
And neither should Karen's newsletters. It's crazy all the work we're doing for you folks. Links for that are below and in the comment section. Thank you again. Be sure to like, comment, and follow us to not miss a beat. And we'll be back with you as price action develops. Have a great weekend, everybody.
Thanks, everybody. Have a great weekend.